How you guys doing today? Welcome back. It is raining outside. Hopefully the rain's not too loud for you guys, but hopefully it's more soothing than anything. If it is, today is lesson 27, validating out. Probably the hardest thing for beginners. I mean, you buy a winner, you make a plan, you get money, and then you end up red. What happened, right? So this is definitely a really important lesson for some of you. It's very similar to the buying in strategies. They're actually the exact same, just an opposite. Because again, I think we gotta keep it super simple for a beginner. If you are far beyond a beginner, you're just trying to get some extra tidbits, this may be a bit boring, but a great reminder for you guys who wanna kind of have some new strategies, some new ideas moving forward into your own execution and validation strategies. So we have 4 things to talk about. First is mentality. It'll be pretty quick. It's really important to have a plan and stick to it. Again, I consider myself someone with a 100% success rate, not because I win every trade, but because every single trade I write and execute a plan. That plan includes validation strategies. There are 3 we're going to talk about today, and then when you act on those correctly, you have a 100% success rate mentally because you're thinking, hey, I bought in well, I got green, I validated out, I made some money. Yes, some of these are better for runners to get those big ones. Some are better for more short-term plays. We're gonna mix them all in here today and talk about these. But again, the mentality has to be the same. Write a plan, act on it, and you can change it if you need to. I don't like changing my plans once they're written, but again, if the macro markets really start to dump on you, if they start to really surge on you, sure, you can move your price targets up or down, you can do all those kinds of things, but again, you must have the idea that eventually, when you hit that green box that you drew, you have to validate out or prepare to validate out. Lastly, for mentality really quick, is that we do not get greedy. If you have a resistance trend line, a horizontal resistance line, and it's not showing any life, prepare to get out. At least get some money out, get some profit. I'm not saying don't go for runners, but again, there's no life coming. Make sure you guys get some money out of it, and you can always buy back in lower, or just buy back in where it is now, and then you can keep running up and it's no big deal. But again, mentality is huge. We'll discuss that briefly today. So the first strategy, the second point in the video we're gonna talk about, is value. When you get to a certain value on the charts, right, you go to 3% up, 5% up, 10% up, whatever your price target is. Once you hit there, what do? That's the first strategy. You're going basically off of value, off the numbers alone. We'll get into that deep dive today with that. The second strategy, or the third point for the day, is EMA lines. If you were to enter off of value or EMA crossover and you get up, hit price target, and we start to see it kind of come down, you can use the EMA lines as a good gauge of how much life you're losing, right? If you kind of go up, you have a good run up, you can see in the chart, ooh, the 10 EMA line has great run-ups. You cross under the 10 EMA, it may be a good time to get out. EMA lines are great for confirmation and validation. We'll use them for validation today. I'll show you all those kinds of things right here. And last one, our 4th point of the day, and our 3rd way of getting out of a stock and validating out is scaling out. You can take 20%, 50, 80, whatever the number is. When you get to your green box and you see it's kind of shaky, take half your profits off the table, let the rest of that bad boy run. This is easily the best for getting those massive run-ups, and it's the best for consolidation plays. When you have a triangle and it's really getting condensed, it's really condensing down, you hit the resistance trend line, or you hit that ascending triangle area, or horizontal play, you hit that resistance, take half, you got your price target. If it keeps running, you can buy back in, or let the rest, your 50%, 20, 40, whatever's left in it, let that bad boy run and rack up some real numbers for you. Those are my 3 basic validation strategies. I know some folks have some crazy, oh, we have wheels on options, and oh, we have these crazy whatever algorithms. I'm super simple. I only use those 3 strategies. And that will conclude our video for the day. So to get started, let's briefly talk about our mentality once again, just quickly, and then we'll get into the strategies. Y'all, gremlin, weirdo, let's get into it. So again, I think it's super important for your mentality, if you're a beginner, to go from being like, I'm gonna judge myself on always being green in all my trades, ho-ho, to going more towards I'm gonna write a plan and execute the plan. Your plan can be changed. I don't want you to be putting yourself in these concrete, hard, stringent brackets that you can't go above or go below. You can always change your plan, but instead of changing the elements of the plan or your edge, do not change your edge. Once you have a good winning edge that has proven to be successful, don't change it. Instead of taking out stop losses, taking out price targets, or taking out loading zones, or taking out whatever it is, the indicators that you use, focus on getting better with your edge than changing it. This is going to help you mightily with your mentality. We'll get into mental analysis in a little bit, But again, mentally speaking, if you start to see this as, hey, I'm going to judge myself on getting to a price target and executing out. Yes, I'm going to miss runners, but there's a lot of times I'm going to be extremely happy I took profit when I did. And you can start to work on your edge, your mentality, zooming in on different time frames, changing EMA lines, doing different things. But for now, if I was you, in my opinion, I'm sticking to a plan. I'm not getting greedy. I'm not going to get scared. I'm going to execute my plan and judge my performance off executing a plan. As you get better at writing the plans, better at seeing stuff, you will see improvements at that point. But to change everything, scrap it all, and be like, I don't like stop losses because they lead to me getting canceled out a bunch of times. There will be a time when you regret not having a stop loss, and all those runners that you have making money mean nothing because that bag you're holding takes all that profit away. So again, I mightily implore you during this early stages of your trading career, your journey, right? Get better at writing plans, get better at focusing the edge that you want to have, trying it out, and then changing it after 200-300 trades. Paper trades work too, but again, focus on executing the plan. That includes price taking and validating out, not blindly trying to get runners. It doesn't work that way. So with that being said, our first validation strategy is value. So the whole entire idea is very simple for a beginner. Once you hit that green box or you're, hey, this is my take profit area, you just take profit. It's not hard. This is easily the most basic idea. It's great for a beginner, but it's not good for runs. The pros of this is the simplicity. You draw your green box, you then have options while you're in there. You can put a stop loss, a trailing stop loss, a take profit. You can just take profit wherever you want inside that green box, call it a day, bing, bam, boom, you're out. There's no second guessing, no struggling. There's no, oh, what if this happens in the macro markets? You're in your green, you're gonna end this trade green. That's the pros. The con's gonna be runners. If you were to have this stock go up to your green area, you take profit, and then it comes down just a little bit, you're like, I gotta get all the profit, oh God, and then you take all your profit off, and then it shoots up 40% more. You have no chance of capturing that unless it's like a nice continuation with no red going up, which is a rarity on this time frame. It does happen, but it's not gonna be the main crux of your issue. It's gonna be when you have a little bit of red, you take profit because you get a little bit too hasty. Some great strategies with this. I'm gonna show you some great examples. I have 4 of them today. The first one is this. At the bottom of your green box, I always set a hard take profit or a hard stop loss. This to me is the best way to ensure having green. Again, a lot of times your stock price comes into the green part, it dips out of it, and then it keeps going up. That's fine. If your price target is 10%, take your 10%, take your ball and go home, that's fine. But again, I set a hard stop loss at the bottom of the green box usually, especially when I first enter it. Let me get my profit, let me get out. The second thing to consider when you hit the green box for a value validation strategy is a trailing stop loss. Let's say you run up 4 or 5%, you're in your green box, you're up towards the middle, towards the top of your green box. A trailing stop loss is great. What it's gonna do, and you can again Google this or whatever you want to do to make sure you have more information, is that when your price goes up, the trailing stop loss also goes up. So price is here, trailing stop loss is here, price goes up, price dips, it comes down, your trailing stop loss will not move. It keeps going up. When you get back to that 2 or 3%, it comes up with you, it comes down, it keeps operating, it goes up more, and when you finally get below it, you'll validate out. So trailing stop losses is a great way to have this strategy of value, but also allow some runners of 2 or 3, maybe 4%, give it a little bit of room there and let it operate. But the main goal of validating out by value is to use technical analysis, you use all your factors of your trading plan, you find a good value that you hit, you get in, you run up, hit your price target, and then you just get out. It's as simple as that. I have some good examples. Let's look into them. So this is Alex, A-L-E-X. I actually have all the charting done already. I've called this play literally 2 days ago, and here we are. We saw this buy-in spot. We can see I was right on target. See that right there? That's math for you. This looks pretty good. 1770, it hit there. It ran up beautifully. Now that I'm in my green zone, what can I do? Again, you have 3 options basically with the value play. 1, you just take your profit. Congratulations, you earn money, good stuff. 2, a hard stop loss, or 3, a trailing stop loss. Let's check out ALEX and how it looks with all 3 of those things being implemented. Let's check it out. So with Alex, if I wanted to just take profit, it's not a stupid idea in the least right here. 1, we take our resistance.